Hello everyone, welcome to Options Discovery on John Lothian News is the Spread. My name is Esma Awas and I'll be your host throughout the series. Just like you, I'm no expert, but with the help of some, we can learn more about options together. In this episode, we'll be talking about equity options price behavior around earnings announcements. Later, my colleague Alex will get a chance to sit down with Callie Cox, a seasoned investment analyst and content creator at the social-based brokerage firm Etoro. Callie discusses how options prices can behave in different earnings scenarios, as well as different indicators used to predict underlying market sentiment. In order to get into how options behave during an earnings event, we first need to go over the very basics of what an earnings event is. Corporate earnings announcements, for those who don't know, are statements that update investors on the financial health and profitability of a corporation. These statements are required by the SEC to be submitted on a quarterly and annual basis for all publicly traded companies. Quarterly reports are labeled by the SEC as 10Q reports, and annual reports are labeled as 10K reports. All corporate earnings announcements contain three big financial statements that give an investor an indication on how a company is doing. These include the income statement, balance sheet, and statement of cash flows. Each earnings report also comes with detailed notes giving context to the change in certain numbers on those statements. Earnings reports also coincide with executive earnings calls, which are publicly available for investors to listen to. Commentary from high-level executives on earnings calls often gives investors insight into the direction of the company. Oftentimes, investors will read between the lines and speculate on a company's future operations based upon executive tone and word. So, how do equity options prices behave in response to an earnings announcement? Well, that question depends on a number of factors, such as the specific company in question, macroeconomic conditions, sector trends, and more. But when looking at equity options, we can see that implied volatility rises shortly before an earnings announcement. This is because many investors expect larger than normal moves in the underlying due to the results of an earnings announcement. It is important to understand how volatility will move, as it is one of the biggest inputs in options pricing. Higher volatility will yield higher options prices, all other factors being equal. One of the most important things for an investor to understand about implied volatility around an earnings announcement is the concept of volatility crush. Volatility crush is where an option will experience a fast, sharp drop in implied volatility, which is often due to a major event in the underlying. Volatility crush is usually seen to occur directly after an earnings announcement. The Greeks are also extremely important to keep track of when looking at trading into earnings. It is important to analyze how earnings outcomes can affect the price of an option. One of the best ways to do this is by looking at Greeks like delta and gamma. These can give options traders insight onto how an options price can change in relation to a change in the underlying. Theta can also be important for options that have a shorter time to expiration. Options traders may sometimes use options with a shorter time to expiration to trade around events like earnings. These options have a higher theta, which needs to be taken into account as time value erosion becomes another risk to manage. To talk more about how options prices react to earnings events, my colleague Alex sat down with Callie Cox, an equity and derivatives investment analyst working at the social brokerage firm Etoro. Callie gives insight into not only how options prices react to earnings, but the mindset and checklist needed to set up a trade. Please enjoy an Options Discovery interview with Callie Cox.
All right, everybody, welcome to another episode of Options Discovery. Today, we are joined by Callie Cox at Etoro. So Callie, how about you just start off, introduce yourself, and run us through your educational and career background. How'd you get to where you are today?
Yeah, well, thanks for having me, Alex. I'm so pumped to be here. Options were actually my first love, completely by accident. Even though I focus more on stocks and bonds these days, more traditional capital markets. So basically, I backdoored my way into finance, Alex. I actually went to journalism school for college. I went to UNC.
Nice.
Yeah. UNC, go Heels. Didn't realize or didn't know what I wanted to do. I just knew I could write and I kind of like numbers. But I didn't know how I put that together. I was lucky or fortunate enough to get an internship at Bloomberg as a news intern, and then lucky enough to get hired as a full-time reporter. And the thing that Bloomberg does when they hire somebody straight out of college is they make them go through a rotational program where they basically sit on different desks for a few months at each time just to help you realize where your passion really is or where you'd actually want to work. They want to be able to match you up with something topic that fits your skills best. So I rotated on the corporate finance desk first. Bonds, I was like, ew, don't love this. I went to the stock market desk, loved it. Loved the energy around the stock market, loved the familiarity with it because everybody watches the stock market, even if they don't fully understand it. But then I wanted a full-time job, and the only position they had was the options reporter. And I was like, great, I know nothing about it, but I want to be on the stock market team, so I'll take it. So it's kind of a weird way into it, but basically what I did at Bloomberg for 2 years, a little longer than that, was I wrote this daily options column on differences in implied volatilities. I finally learned what a put was, what a call was. I had so many good mentors along the way, from within the industry and within Bloomberg. And I started basically writing research through that daily options column. It got really popular. I met a lot of really awesome people, and I realized that I wanted to move into research full time because I was writing research, but I was still a journalist. It was a little bit different. So luckily I got a chance to move to Tab Group. It's a market structure firm. I don't think it exists any longer, but Larry Tab is actually at Bloomberg now. So funny how that comes full circle. But I worked at Tab Group. We did a lot of options market structure consulting for a bunch of bigger banks, asset managers, exchanges. I wrote reports on how to trade options, what to consider when you're trading certain products. It was very niche and very nerdy, but I loved it. But then I moved to North Carolina, had to get out of the options focus because I was down in North Carolina, and I actually moved on from Tab Group once I moved down to Raleigh. So I had a few years working in the corporate treasury of a bank. It was actually the bank that bought SVB for Citizens. So I was in their corporate treasury for a bit, wanted to get back into research. And that's basically at the phase of my career that I'm in now. I joined LPL Financial, was a senior analyst on their team, and then moved on to Ally, a big bank with a brokerage. And then my boss's boss at Ally stole me to go to Etoro. And quite honestly, I'm in the most fun role of my career right now. I'm helping build a thought leadership product for Etoro, meaning that I basically talk about markets and get paid for it. We focus on stocks, options, and crypto, but we're also a social trading platform. So I get to focus on investors that are more like me, that want a community of people like them to be able to talk about stocks and options and trades and what exactly is going on. So it's a really roundabout way to say I'm not your traditional finance person, and I certainly was not your traditional options person, but here I am talking about options.
Well, it's really interesting that you say that, because it just goes to show we've had a lot of different people from a lot of different backgrounds on this show. And it's just wherever your path kind of starts, a lot of the times you end up doing something that you just never thought of, or something that you had an interest in. And you could really come from anywhere and land in this industry, which is always really cool to see. And it's really cool to hear your story. So with that being said, today we're going to be talking about options, of course, and more specifically options and earnings. So the first question I have for you would just be, obviously earnings season is kind of around the corner. We've had some of the big tech earnings in the past couple of weeks, and just what are some of the most important things to watch out for when trading options around such a big event like earnings?
Yeah, wow, that's a loaded question. So I approach everything as I do. I put my analyst hat on, and then I think about the trading strategy of it when I put options in the mix. So whenever I answer questions, I might start with like the analyst stuff and then get into the nitty gritty a little bit more, just giving you a little window into how I think about this. So earnings season is really interesting right now. I'm sure you've read about it, but earnings haven't exactly been stellar lately. However, the market has rallied, and we've seen a lot of positive reactions to earnings just because expectations, i.e. Wall Street estimates, have been so low. We've been so pessimistic going into earnings season, and that makes a really low bar for stocks to beat, and they end up beating it. Many stocks end up beating it. A higher percentage of stocks have been beating estimates. So as an options trader, you're going in, you're trying to trade around an earnings report. I think you first have to consider expectations. because, you know, in markets, the takeaway is really in the eye of the beholder. So you have to think about the perception of what's going to happen versus what actually happens. And then you have to think about the option side of it too, of course. Well, I'll actually back up. So putting the analyst cap back on, you have to know about your company, the company whose options you're going to trade around earnings. That seems obvious, but I feel like a lot of traders go into you know, trading an event, trading an analyst day, trading earnings, and they don't realize the nuances of the company. You know, what the company talks about after earnings come out, commentary, very important. You know, what the company specializes in, what the products are, you know, what the hotspots are for certain companies. And then they get surprised, they put a trade on and then the trade moves against them. And it's because of some like niche product or, you know, niche issue that only really focused investors can pick up on. So, you know, I think all options traders should understand the nuances of the companies they're trading. Again, that seems obvious, but I don't think a lot of people do it. But getting into the options too, you know, I think you really have to consider what options you have within your options, you know, what expirations you can trade, what strike prices you can trade, how precise you can get with this earnings trade that you're putting on. And obviously, how easy is it to put that trade on? You know, what's the liquidity in the contracts that you're trading? You know, again, you know, if there are a lot of strikes on a certain stock, there may not be a lot of volume in certain strikes. So that's another thing to consider too, because the efficiency of trading and the liquidity of, you know, putting on a trade is, I would argue, just as important as making the correct trade. So there are a lot of things to consider, and I don't want to overwhelm anybody. But I almost think of it as like a basic checklist. It's like, know the stock and then know the trade you want to put on. And, you know, just think about the most efficient way to put it on.
Yeah, that's really interesting. I think it's a great way to break it down in an actionable way where now we have a view on the stock. We know the company relatively well, and now we're going to put on a trade based upon expressing that view. I think now we're going to move on to part 2 of the interview, which we get to talk a little bit more about your firm, or the firm that you work for, Etoro, and the new options platform. So obviously, you guys just launched a new options platform in October of last year. You know, maybe run through some of the features and things that you guys offer at Etoro.
Yeah, for sure. So I know I've probably like put somebody's head in a blender with the stuff I've been talking about because we've gotten really nerdy. But the beauty of eToro's options product right now, we actually acquired a brokerage called Gatsby last year, and then we rolled out our options platform, rebranded as eToro Options. And the beauty of the options platform we have here is that it's super, super simple. The UX, you know, the trading platform is super crisp. You don't have to go through all these gymnastics when thinking about how to express your views, because we make it so easy for you. You go onto the app, you pick the stock you want to trade, you stay where you think the stock will go, and then we have a set number of trades that you can make to basically express that view. Obviously, we have buying calls, buying puts, and then we have some spreads that you can execute on. But we walk you through it step by step so you understand exactly what trades you're putting on, because we believe that investors should understand the trades that they're making, and we want to help them do that. So eToro Options, it's been around since October. You know, it has the benefit too of everything else the eToro platform offers. We have a really good draft trading function. So if you just listen to our whole spiel about trading around earnings and you're like, I don't even know if I feel confident enough to make a trade around earnings, like I just feel so confused now. Luckily, we have a draft trading platform where you can basically set up a trade, but instead of executing it, you can click draft trade and watch how that trade performs without actually putting the trade on. I think it's a really slick way to teach people, you know, how options move in real time, considering all these things that we went through, Alex. eToro has a lot of really good trading analytics as well. We have trading view charts. We have all the analytics that come off of that. And then, of course, we have our community too. We have 32 million registered users on eToro. And we have asset pages for every single stock, and options on stocks you can trade, where people can post their trades. They say, I traded this, and you can understand in real time where people are looking and where the momentum is going. So, I mean, I could talk about this for days. I think we have a great platform, but I really do think we have something special in the option side of our platform, because it really does tailor itself to the beginner to intermediate investor.
Yeah, and I think that's really interesting what you just touched on. And a lot of, eToro's been around for a little while now and the name's been out there, but a lot of, what I found you guys had was describing yourselves as that social investment network and having that really built into the DNA of what you guys do as a broker dealer. So can you talk about some of those social features as it relates to options and how users are using those and using them to inform their decisions or just learn more?
Yeah, sure. So I'll go back to the asset pages and where you can post your trades. So at the beginning of the conversation, I know we talked about the nuances of a stock. You have to understand the company of the options you're trading. Of course, that's like investing 101. We try to make that easy for you. We have an asset page with all the recent news of the stock, lots of charts, ESG data on what your stock is focused on, and what the important products are. And then we also have this social feed where we have people to the side talking about what kind of trades they're making in the stock, if they're buying, if they're selling, if they're looking at calls on the stock, if they're looking at puts on the stock, and why, what events that they're trading around. And it's really easy and simple to navigate. You're able to find other people in different communities as well. We have, for example, an Invest in Her community where it's a community for female investors. I've actually done some work with the female investing community and helping them, understand more around investing. And that's kind of where we offer a value add, Alex. I think that we come in really well and we just provide you with all the information and all the trading, all the assets that you could ever need to curate the kind of portfolio that would work for you. And, with the social trading aspects as well, we have this feature called Club, where, if you have a certain amount of equity, you're basically in the club and you have access to an account manager who you can talk to. That's another social aspect, about your portfolio, about the products that we offer. And that account manager can help connect the dots for you. And we even go so far as to organize events for our club members, so they can get together, have a happy hour, commiserate over, how tough of a year it's been in this bear market. So we take social seriously. We built our platform around, being social and meeting other investors like you are. And, we have a lot of really fun stuff ahead that we're going to roll out on the options front.
I hope you learned a little bit more about how options react to events like earnings. And I want to say a special thank you to Callie Cox for coming on the show and sharing a little bit of her knowledge with us. And with that said, I'll see you all in the next episode. If you're hungry for more options content, make sure to subscribe to the JLN YouTube channel and check out our social media accounts. Be sure to check out our website, johnlothiannews.com, Markets Wiki, and the John Lothian newsletter for more content.